Hey folks, welcome back to the Traders4ACause podcast. My special guest this week is a seasoned swing trader and formerly ran TradeOnTheFly.com, Miss Michele Koenig. Michele, how you doing?
Good. How are you, Zach? Thanks for having me on today.
You betcha. And we also have our old friend, I don't know his name, from Investors Underground. Oh, Nate. Nate, how's it going, buddy?
Me.
It's
Not too
you.
bad. How about you?
Not bad at all. Not bad at all. So, Michele, I hear you hate fishing. Can you tell me a little bit about your love affair or hate affair with fishing?
Yeah, we fly fish, I'm from Montana, so big outdoor person, and both my husband and I love to fly fish, love to get out on the rivers up there, and started fishing when I was a kid, just spinner fishing, and used to camp in the mountains with my parents and spend a lot of time fishing in the lakes, and just have always enjoyed getting out on the rivers. So it's relaxing, good way to take a break from the stresses of life and just enjoy the outdoors.
That's amazing. And you just ruined the rest of the interview because like 4 of my follow-up questions were, what are you going to do if you're not trading anymore? And you just kind of like checked all those boxes, but
Well,
that's fantastic.
She did retire. She retired, but she's still trading. So I don't know.
Yeah.
So before you got into swing trading, what did you do?
So before I got into swing trading, I was in software sales. I mean, I had various different jobs after college, got a degree in finance, worked a lot of different odd jobs along the way, moved around the country a little bit. But before I started trading, I was actually working in software sales. So I was in front of the computer all day and gave me the ability to watch the markets, watch stocks, and start dabbling in trading part-time.
Very nice. What type of software did you sell?
We were doing customer support, I guess it was online. It's a company called Right Now Technologies that got bought by Oracle. So it was like all the FAQs and the online chat. It was kind of when people were trying to move customer service more onto their websites rather than having call centers.
Wow.
So it worked for them. Yeah.
And just before this call, we were talking about how like you feel like you're a little technically challenged and you were a software sales. My goodness.
Yeah. We had good technicians that would be on the sales calls with us. So, I just did the sales side of it and finding the customers and finding their need, and then bringing the technical guys if we needed help on the technical side of stuff.
So you were responsible for just turning on the charm, essentially.
Yeah, something like that.
I got it. Well,
making the relationships.
So maybe we can rephrase the question to make it a little more challenging. If you weren't trading or fly fishing or team roping,
right,
what would you be doing for a living?
Probably, having a business of my own. I've always been very entrepreneurial. I have never liked, kind of being under someone else's thumb. I like to make my own way and be in charge of my own destiny. Not that I haven't worked for other people before, but I'm very much driven that way. My dad was that way. So I'd have probably some sort of small business where I'd be a little bit more in charge of my own destiny, not have to rely on somebody else for what I was going to make or what decisions were going to happen. So definitely have a small business.
Do you think that when you were running the Trade on the Fly service that you were kind of scratching that entrepreneurial itch at the same time while, trading and making income that way?
Yeah, maybe a little bit. I think more of that came from working with Nate, when I was moderating and kind of helping some of the traders there at Investors Underground. I really enjoyed helping people learn. When I was a kid, I used to give riding lessons. So I grew up showing horses. And so kind of that teaching part in me, I think, was a big part of that as well. I really enjoyed kind of helping people along their path, sharing what I knew, trying to help people, find their path and hopefully take a few of the things that have worked for me along the way with them. So I really enjoyed that part of it as well.
Awesome. So if Nate and I fly out to Arizona, will you teach us how to ride a horse?
Yes, I would love to do that, and maybe even do.
He's already extended that invite for like 3 years. My daughter.
I was traveling across the country last summer, and I reached out because we were in Montana, but apparently Montana's large. I don't know.
Yes.
We were in Red Lodge outside of Yellowstone.
Yeah.
And you said that you were outside of Glacier.
Yep.
And I'm like, oh, we'll pop right over. 12-hour drive or something.
Like 7, I think. Yeah, exactly. It's a little ways, but the invite is always there. We'd love to have you. my niece and nephew-in-law were actually just visiting us here in Arizona over the weekend, and he had never ridden before, and we had him roping in 2 days. So we
No
can try to help
kidding.
you guys out too.
That's amazing. Well, you know, most of my adult life, I've been told that the only horse that could handle me is a Clydesdale. Uh,
You look thinner though.
I've shed a little bit of weight, and maybe now, like a regular thoroughbred could fit the bill for me.
Yeah,
So,
I got one that could take care of you.
so trading for you, you know, as you took your career from selling software into becoming a trader, was it always a means to an end, or did you just fall in love with the art of trading itself?
So my interest really from trading started when I was in college. We had one of my upper level finance classes. We had a group project that we had to do. And so we went to this guy's house, and it was, you know, kind of all college age students. And then we had an older student in the group. And we were all sitting around his house, or, you know, his trailer, I guess it was, talking about the part-time jobs that we all had while we were in college, you know, to pay bills. And when it got to him, we asked him, we were like, well, what do you do? And he's like, well, I go down to, and I don't even remember who it was, like Merrill Lynch or whoever it was way back then. He goes, I go down like once a quarter and I buy a handful of stocks. And if I do well that quarter, I don't have to work at Pizza Hut and Burger King and the bar or wherever all the rest of you are working. And if I don't pick well, then I have to go get a regular job. And that stuck with me literally from that moment forward until I started trading, because I always thought to myself, you know, how does this guy just, you know, go pick a few stocks and, you know, make enough money to live on for, you know, 3 or 4 months? And so I thought about that forever. And again, because I always really kind of wanted to be in charge of my own destiny. And I didn't like the idea of being stuck, you know, making an hourly rate or a salary. I mean, I really wanted to have the flexibility to, you know, make a good living. And then when E-Trade and Ameritrade, you know, started coming online where you could make some of your own trades, that's when I started trading part-time. And that guy's conversation about buying and selling those stocks always stuck with me. So that's kind of where my initial interest came from, was the ability to work from anywhere as long as I had internet and be in charge of my own destiny and not be capped, you know, in what I could make money-wise. So
Very cool. So was it swing trading from the beginning, or did you day trade at the beginning? How did you kind of sort out?
I've always been swing trading focused, and then done some day trading on the side. The swing trading just, again, kind of fit my lifestyle better, with, you know, wanting to enjoy the outdoors and, you know, have some flexibility to not be tied all day long to the screen with day trading. Not that I haven't, you know, I do day trade some, but the swing trading's where the majority of my profits have always come from, and kind of where I'm a lot more naturally inclined to trade at.
I've seen a few Twitter traders that claim that they can day trade from a kayak. So I don't know. Just saying, like, maybe you could fish and day trade at the same time.
I've been known, I think Nate knows, I've been known to make some trades on the road or from the river that actually have been some really nice trades. So I'm not opposed to using the phone for a few trades along the way.
There's something so anxiety provoking to me about placing trades on a mobile device. Like Nate, I'm sure that you're so used to doing it. Like I hear you trading from an airplane 40,000 feet in the air, but I don't know. Like I feel like my hands would be tied almost. Like, isn't that nerve wracking?
It is nervous, especially plane, because you never know. Like, especially if you're going to Bahamas or some spots around Florida or something. Sometimes it just goes out, and like they give you a warning, but you never see the warning. And it's like, hey, 10 minutes, you're gonna lose it, and all of a sudden you're like, uh-oh.
Yeah. What am I gonna do?
Close all positions.
If I ever do trade in a plane, I always and I never use hard stops, but as soon as I get in, I put in a hard stop. Otherwise, you know, it's a really bad idea. But like what Michele was saying, and you know, it might be anxiety for you, but you know, she's talking bigger picture, and she's got a bigger plan, looking at daily charts and looking at daily support. So it's a little bit different than, you know, whereas I might have a much larger position intraday, whereas she's got, you know, a little bit smaller, but bigger picture idea,
Right.
You know, thinking I'm going to let it have this much wiggle room. And honestly, the best thing you can do is get off the computer and let that trade
Stop
work.
staring at it. Yeah.
Don't micromanage. Yep. So yeah, I think my phone's a great tool if I'm not there. I mean, I can check and see what stuff's going on, and if things are starting to move, I can put an order in on my phone if it's something I've been waiting on. So yeah, like Nate said, I'm definitely bigger picture idea. I don't need it to work in the next 5 minutes.
Michelle, it's running.
I know for a fact that with my adult ADD that I would go in thinking, oh, I'm going to be a swing trader, and I would leave in one day as a scalper. I entered this as a swing, and I was out in 10 minutes. It was great. It was
you have to separate it though. Like if I'm taking swing trades, I'm not taking it in my main accounts. I've got a separate account that is specifically for that, so that I don't turn day trades into swing trades and swing trades into day trades.
Yeah. I mean, watching your swing trades, minute by minute every day you'll never get the trades to stick, because there's so much natural intraday volatility in these names, and especially if you're watching your P&L go up and down. I mean, you just got to turn that off and have your risk set and give it time and room to work. And, even if I am at the computer and, watching stuff too much and maybe start second guessing what I'm in, I mean, I always regret, not following maybe my initial plan or cutting things short because, I start, watching it on too small of a time frame. I always regret that, never giving it enough time to work.
So I think we kind of answered this question already, but tell me about your balance between technicals and fundamentals. Is there a balance?
90 to 95% of what I do is technicals, charts, support lines, moving averages, stochastics, 5 to 10% fundamentals. So I'm interested in the float, the short interest, institutional holdings. I like to track insider buying a lot, especially on the really beaten up names, kind of the dumpster dive trades that I love, that have put long bases in place and you start seeing insiders buying. And I'll peruse through the news a little bit, earnings on kind of just a high level if it's something I'm looking to get into longer term, to see if the story is matching up with what I'm seeing in the chart. But most of what I'm doing is the chart.
Got it. I've talked to several traders over the years that have said that the more of those studies that you put on the chart, the more cluttered it gets and the less they ultimately mean. Do you feel that those studies are primarily a better indication of what other traders are doing, or do you garner true value in your strategy from them?
So absolutely. When I was a new trader, I went through a period where I had so many different indicators on my charts that it was almost, kind of paralyzed you and really hard to make decisions. And I also at the time didn't really understand how each of those indicators that I was using worked. But at this point in my trading, the chart price is always number one. Price is the most important thing. And my technical indicators that I use are just guides. They're supporting what I'm seeing in price. And I only use a few. I value them a lot. A lot of times when I ignore what those indicators are telling me, I'm usually, sorry. So I rely on them heavily. Price comes first, but those indicators that I use, but I also understand how those indicators work and also what environments, like the stochastic works great in chop and range, doesn't work well at all in strong trends. So you've really got to understand the formulas behind those indicators that you're using and what environments that they're going to work good, because some indicators are going to work well in trends, and then some are going to work well in ranges. And, your strategy is going to change depending on, what type of market environment you're in.
So if you had to pick one, which one would you pick? If you only had the choice of one?
Slow stochastic.
Yeah.
Yeah.
What about when I mention it too? Because whenever we're on the same page, they're usually like perfect.
Yeah, exactly.
You just wait for, as long as me, Michelle, and Paso are on the same page, it's like 99%.
Yeah. Golden.
The stars
But one
align.
thing about Michelle too, though, is like she was saying, she might watch a stock for 2-3 months. Like she wants to swing it and she's watching it. It's going, but it hasn't broke or proved yet, where she wants to get in. Other people might get in there and get a better average, but they're faced with more risk to the potential downside. She will literally sit there and wait for it to shape up, prove, and make sure it hits her criteria before it. And I think that says a lot, because a lot of people are too quick to hit the buy button, and then they second guess themselves because they're too early. She waits, prove to me that, what I want to see happen is actually happening. And that's one thing I think why we hit a lot of the same names a lot, is because, that's when the momentum's starting. She's been watching it for 2-3 months. She already has her whole plan, and now it's time.
Yeah, I don't want my money sitting there not doing anything. I want my money working for me. And sometimes those charts take a long time to get ready, to actually move. It takes time for those bases to set up, or the patterns to set up, So there's always different options to trade inside the patterns, but I'm waiting for that chart to set up and really be ready to move. I don't want to get in it early and then have to wait for 3 or 4 months for the base to continue forming and have my money just kind of sitting there not working for me. I want my money working for me all the time.
Yeah, I mean, for day traders, like 3 to 4 months is like, that's like we're on to the next career. I mean,
Yeah.
they have no attention span. We've been over this a million times. Like
Right.
if they don't see it immediately, they move on. On next. No,
Yeah.
not working for me. So
Yeah.
that's
I'm surprised
incredible.
though how fast it compounds though, and like what you're talking about is like these moves. They literally are working us, as day traders out. But in order to get those big moves, they have to work out the size, along the way. If everybody's sized in at the lows, then it's never gonna go straight up. So they work through, and all these times we want to sell is literally just that process of working traders out. From a swing perspective, if you're not watching it and watching every single tick, you get to get through that part, and then the easier upticks ideally come. And one thing that I heard one time that's really true is stocks that double tend to double again. And that's, you see a lot of people compound gains when these stocks, and like PRTY or APPS, I think you were involved in, I forget the other one, it went like 7 to 30 or something like that. But these stocks, they go 4 to 8, then 16 all of a sudden, then they're 30, and then they're 80. Like it just keeps on compounding. And I don't know, maybe I'll get there one day.
So that certainly sounds appealing to me. I mean, like I've talked about this. Like I feel like if I was going to do this, if I was going to go back into trading on my own, that it would be the swing variety. But again, like I have a very short attention span. so
You need to take up fly fishing and team roping, Zach.
Oh yes,
that's what you're missing.
Yeah.
But I think that's why it's important to have different strategies too, because you check that box of, for me, I like to have maybe a little bit more control, or at least know that I'm making. But then you have this other one that's more passive that you're allowing to work. So for you, I think it's hard to just sit there and just buy and be like, all right, I'm swinging these and I'm just going to check it once a day. That's difficult. But if you had two strategies where you're doing something more active and then you've got your passive, I think you check both boxes and it makes it a little bit easier to let these ones work.
So Michele, how do you balance the idea that if you're holding a position over several months and you kind of want to let it work, I mean, the chances of there being some fundamental news on that symbol are probably pretty high, right? I mean, like, at what point do you consider something fundamental to be noise and not even a part of the strategy, or won't affect your position?
I rarely will hold through known news events, so like earnings, and again, it would depend on what my cost basis is in something, but I'm generally out in front of any known news related events, just because there's just so much risk, and I had one of those recently that I had held and had a great cost basis, started buying it last fall and held through a known news event, and it wasn't good, and it left a mark. I will be looking to rebuy it again, but I had a low basis in it, but gave up a lot of profits in it holding through that known news event. So in general, I don't. I mean, there are going to be times that news comes out that's unexpected, and so I think it's just important to be sized appropriately, in the names that you're in, and have an understanding of what's moving it and what the news is. I mean, obviously, low float names that get momentum off of news are different than maybe a consumer discretionary that's going to be a much slower mover. And that's the other thing. Just because you're swing trading, there's different types of stocks that you can buy. I mean, there's those slow and steady things that have very low volatility, low beta. There's nothing wrong with those, and those over time can add up really well. You're just not going to have the craziness that you might have in like low float names that have been going recently. So there's different ways, if you're wanting to swing trade, that you can get into doing that without having all of that volatility that can be so nerve-wracking when you see those big moves both directions.
Are you pretty discretionary or arbitrary with your position sizes, or do you have rules like for how many of your eggs you'll put into one basket, like in a single name?
Yeah, I don't have like a hard and set rule. A lot of it is going to depend on what the market's doing, how I've been trading, what the setup is. You know, is it just a technical setup? Is it something news driven? So there's a lot of factors that go into that, and my sizing. So, you know, and a lot of it depends on how I've been trading, you know, how my confidence is, and, you know, and what my plan is for what the setup is. There's times during the year that I'm going to really size up, you know, because the market's right and I've been trading well, and maybe the types of setups that I like are working. And then there's going to be other times of the year where maybe my style isn't really in favor. I mean, just like stocks, I mean, the markets are cyclical every year, and trading styles are going to have turns during the year where, you know, different styles of trading are going to work better than others. So there's times during the year that I need to size down and trade less. Otherwise, I'm just going to end up with a bunch of paper cuts and go backwards in my account. So you got to be really aware of that as well.
So you mentioned before that you like to have your money working for you. You know, what if you don't have an idea? Will you just put it into like an exchange ETF or something, you know, just to keep it working, or will you sit on cash?
No, I'm fine with sitting on cash. I mean, I'm fine with going from, you know, having 10 or 12 positions down to being in cash very quickly if something changes in the markets that I don't like. I can always get back in, you know, and that's the thing is I'd rather be, you know, out than wishing I was out, right? I can always redeploy if things step back up again. But if there's something that changes in the markets or an individual name that basically tells me something's not acting as I would expect it to act, I'm fine with going to cash and waiting, because, you know, sometimes you've got to do that as a trader. I think it's easy, and I know I've fallen into this trap a lot of times and still do, where, you know, you just want to trade all the time, you know, especially if things have really been working and you're really actively trading, and then things start to change. It's hard because we're greedy, right? We want to keep making all of that money. But when things start to change and you start getting paper cuts, you really got to be aware of that, or I have to be really aware of that, because that usually means something in the market's changing, or something, you know, maybe money's rotating out of the group that I've been in into a different group. And it's easy to start giving back chunks of what you've made during those times, and nothing wrong with being in cash. It gives you more time to fish.
I didn't think that it existed, but I think, Nate, we have found somebody who's willing to wait 2 or 3 months to enter a trade and then be willing to get out of said trade a day later.
Well, listen, we can't all have side income from this horse or whatever
the roping,
it is, roping championship prize money. So
I would like to tell you that team roping is cash flow positive, but it's not.
Wait, you said team or teen roping? I mean, teen roping. I was a little concerned there for a second.
Yeah, no.
So over the past couple months, you've been winding down Trade on the Fly, your service that had been running for years. What's next for you? What are you doing?
So I'm still trading. I mean, I'll trade until the day they put me in the ground. I love trading, and but just gives me more time. You know, Corey's retired this year, and we're just going to travel a little bit more. You know, be able to go visit friends. We've got friends that have got some ranches, and just wanted to have more flexibility to not feel the responsibility, I guess, kind of being tied to, you know, providing the service to other people. So still trading, just going to be doing more roping, more hiking, more relaxing, seeing the country a little bit. So just having a little more flexibility and freedom in my schedule.
That's awesome. Maybe we'll run into each other on the road.
Are you
going to RV? You're going to travel like by road, or?
We actually bought, you know, we're kind of like gypsies, and we travel like the Clampetts because we have the horses and the dogs. So we actually just bought a horse trailer that has a bigger living quarter in it. And so we will be traveling with the horses and the dogs in that when we go places to visit our friends. And
that's amazing.
You know,
how many horses can it take?
Well, we've got 4, and then we've got 4 dogs. So
holy cow. So you can go, like, you basically go to a campground that takes horses, and then just.
There are places like that. Yeah. So we're in Arizona now for the winter, and we have friends in Texas that have a ranch. And so we're probably going to go home when we go home, like at the end of April, via Texas to Montana, and we'll go hang out with them for a week or 2 and help them on their ranch. And we've got other friends that are in Eastern Montana. So, you know, just kind of go do more of that kind of stuff, set up camp, ride, rope, whatever.
I wasn't a geography major, but going to Montana via Texas from Arizona, for some reason that doesn't really make sense.
I know, but that's probably what we're going to
do. Got it. Yeah. Very interesting. Okay. Great. So
we coming to New Hampshire.
Yeah.
It's on my radar.
To Montana via New Hampshire.
Yeah. I don't know if I want to pull the horse trailer all the way up there, but
you could do them on the, I know a beach around here, particular days they allow it.
Horses.
Could be fun. Yeah. I sent you pictures of when we
Oh, that's right. Yeah.
Yeah, there's beaches like that in Maryland, Ocean City. I think there's some even in New Jersey where they allow horseback riding. You see them all the time. So that's cool. Let's shift gears a little bit. Talk to me about a person or a couple people who have had a big influence on your trading career, like somebody who really kind of paved the way for you to get to where you are.
You know, because of the time frame, I mean, I started trading full time in 2001, and I literally just traded alone for so long. And I had books, but I wasn't involved with, having a mentor, unfortunately, especially kind of being in Montana and being more remote. I just didn't. I think back then, we didn't have the access back then to all of the information, Twitter and social media and stuff that traders have now. So I really paved my own way for the first, 6 or 7 years of my trading. And then my first, kind of interaction, or one of my first, was becoming part of Nate's group with Investors Underground. So I think that really opened my eyes to, having a community to be involved with, other traders, there as support for ideas. And that's what I love about being part of that group, is it's just a great group of diverse traders. Everybody helps everybody out. And so, I mean, if I was going to say anything, that has kind of changed along the way, is just being part of Nate's group. Just having that community, because otherwise we're just kind of hermits trading in our little caves. It's not like you've got friends around, or that you have other people that understand trading to talk to. But as far as ever having a mentor or those sorts of things, I've never had that. I've just had to, learn by trial and error. And there were a lot of errors along the way, I think, because I didn't have, the ability to have access to a group like that to learn from, and there's so much access to information now with DVDs and webinars and being able to access other traders for information. It's just such a great opportunity for new traders that wasn't around when I started. So not good or bad, just kind of, I didn't have anybody when I started. It was just me, my books. So
she was a hermit like Greg. He just traded by himself forever, and then came out.
Nate, that was a hell of a plug. So stick around when we stop recording. Michelle, you can give him your current address. Nate, you can send a check.
Exactly. Right. No, I mean, that was my experience. And I love being part of a group. You hear, different people online kind of bashing, being part of a group. And to me, I just think I want to have a home, and when I am around, since I'm not as active anymore, it's great to be able to jump on there and, watch a webinar or give a webinar or watch a DVD or, see what is moving actively that might be something that I want to put on my watch list, and just be able to exchange ideas, with Nate. Nate and I, chat once in a while, and, it's always great when we're on the same page, and Paso, and, I talk with Eric and some of the other guys, and it's really nice to have that community to be able to access.
Cool. Well, so if you think back to when you got your start, you said early 2000s, 2001 is when you started.
Mm-hmm.
If you could go back to the year 2000 and give yourself some advice, what would you say?
Have a plan. Have a plan. I just started trading with no plan. Try and find somebody to help you. I mean, obviously it's different now, but I think, having somebody else to share their experience and to be able to act as a sounding board when you are having problems. Because, most traders, I think, that have made it have all probably made the same mistakes multiple times. So it's nice to have someone there who's been through that to help give you some direction. But for me, it would be have a plan and really stick to it. I flip-flopped around, as far as the style or how I was trading or the indicators that I was using. So it took me kind of a long time to really find my footing. So I wish I had a better plan when I started, or even realized that I needed to have a plan. I didn't know that. So
I think what Michelle said earlier too, as far as like understanding sector rotation and what the market is currently rewarding, I guess, is another good thing you don't really realize it when you first start, but understanding when to push, because Michelle knows how to push and she does push, when the market is right and will support that. And, but, you know, even better, knows when to pull back. And I think that, you know, understanding that difference is a huge, huge thing to actually pull away from it, because a lot of times we don't know when to pull back and we're still pushing, and, you know, the market hits the off switch and you're like, oh boy.
Then you get back a bunch of what you made.
Yeah. So I think understanding, you know, having a plan and understanding when it's okay to push a little bit more and when it's time to pull back is probably the most important aspect of, at least maybe exponentially, you know, returns or anything like that, beyond just a normal kind of trading pattern.
And a lot of that too comes, because I get asked that all the time, well, how do you learn that? And a part of that's just time in the seat. I mean, I don't know, you know, as a new trader that you really understand that, and it just takes time. And trading is no different than any other profession. I mean, you're not going to go out and, you know, be a brain surgeon and be able to perform brain surgery, you know, right away, right? You got to get training, you got to have time, you got to have experience, or attorneys or teachers or anything else, accountants. I mean, trading is no different. And people, I think, especially right now, the markets are very forgiving and are rewarding a lot. And it's makes me scared for a lot of the new traders, because I think a lot of them probably are having a lot of luck and it feels like they know what they're doing. And when the markets change, you know, it's probably going to be no different than when we've had other big changes in the markets, where a lot of the new retail people don't keep what they've made because they don't understand that it takes time and experience. And we all have luck. When I started trading, I mean, I almost tripled my account in like 6 months. And I thought, you know, I was making a list of everything I was going to buy. And, you know, like 6 months after that, I'd almost blown my account up. So everybody has some dumb luck, and it just takes time and experience to learn some of the things that Nate was talking about.
I've had two guests now. First, it was Greg that said it, and then Ryan last week told me that experience in this market is a liability more than you know, an advantage, because they're basically having to take everything that they know to be true and saying, oh, it's not true anymore.
I don't know. I mean, I disagree with that. You know, I guess at least from my standpoint right now, one of the things I think that I've gotten a lot better at as I've gotten more experience and just gotten older as a person is, when I was a newer trader, I spent a lot of time thinking about what I thought was logical and what I thought should happen. And now I really just want to follow the bouncing ball. Even if it doesn't make sense to me, I know that I need to be aware, like kind of hold some of the things that are my concerns lightly in my mind, but not focus too much on it, because that's cost me a lot of opportunity in the past. And so my job now is just to keep following the bouncing ball. You know, no matter what I believe or what I think should be coming, the markets, as they say, can stay irrational much longer than we can stay solvent. And I just want to try and capitalize on the opportunities while they're here. So
nice. Following the bouncing ball, that reminds me of a speech we had at Traders4ACause. I think it was our second year. We had a very interesting speech from a gentleman who talked about following the bouncing ball. That's very true. Cool. So can you give me an example? And I don't really have much more here, but can you give me an example of a situation in which you entered a position and you had either an incredible stroke of luck or an incredible stroke of misfortune that was completely out of your control, and it just resulted in a profound result in the trade?
Gosh, you know, I mean, I've certainly had some along the way where news came out quickly, you know, unexpectedly after I've entered a position, you know, and had good luck on the upside. But the one that I talked about earlier is a position that I built since last fall. And like I said, I rarely will hold through news related events. And I felt very confident in this, and it had news that was unexpected and obviously gapped down and just gave back a ton of profits on it. And, you know, again, it was just one of those lessons you'd think after 20 plus years of trading, you would, you know, learn. But sometimes we just still need those reminders that, you know, when profits are there, they're, you know, not a bad idea to take them. So unfortunately, I had a reminder of that recently. And I mean, thankfully I had a low cost average in it, but still made some money on it, but gave back a pile of profit that I had in it because I had size. So
I think to your defense though, too, on that is like, you've been trading exceptionally well. So it was worth the risk to take it.
Yeah.
And, you know, you wouldn't have taken it if it was time to take your foot off the pedal.
Right.
And, you know, it's we always have too much size when it doesn't work. We never have enough when it's not. And had it worked, you would have never bought that much size again. So really you were playing with the house's money, and you were in a position to let it work. And, it sucks. It didn't work, but the trade that you still had was better than, what most people would consider, they probably wouldn't get there. I mean, you had a phenomenal trade still, even with that. So
yeah, well, and like you said, I mean, I went into the news related event knowing that if the event went the direction that I had anticipated, I would, and I had gotten out because I contemplated, because I had some big profits in it, taking part off ahead of it, but I knew that I would never be able to get my size back and my average back that I had in it. So I felt like, I talked to myself, I was like, okay, this could just go back to break even. Are you okay with giving all that back? And I made the decision that was a risk that I was willing to take. So
that is the hardest part, I think, about swing trading too. Even not in that sense, but just you've got to make it through some serious like ups and downs, and you play it back so many times in your head. Oh, I should have taken it off. I should have done this. I should have done that. And that's probably the hardest part, I would say, with swing trading compared to day trading, where day trading, you're kind of prepared, you take the trade, you move on. With swing trading, everything's great. And then obviously there's like a either gap down or just a blow off day. You should have taken it. It pulls back and you've got to wait another 6 months before you get those prices again. So at least from my recent, last 6 to 8 months of more serious swing trading, that's probably been this wiggle room. Sometimes it's annoying.
And I think it's really hard, and probably whether you're day trading or swing trading, I know as a newer trader, I always wanted to get the exact lows and the exact highs. And at least for myself, that's not realistic. So I used to get really frustrated with that. So I think if I can remind myself, getting a chunk of the middle of the moves, that I'm, if it's something has a big explosive move, hindsight always is 20/20 and shows us what we should have done. But if I can just remember to be, have those middle of the moves, they're going to be really profitable. That's going to add up, and do I want to continue to work on, getting better at exits or getting better at taking profits on those big explosive moves? But it's, can be much more difficult real time in managing those when it's happening. So I just try and remember, get the meat of the move on, super profitable, wash, rinse, repeat.
Like a machine.
Well, I don't know about machine, just keep working on it.
I think I need to talk to Dr. Brett about this concept because it keeps coming up in every conversation. And I believe from a scientific perspective, the psychological phenomenon is called the negativity bias. This concept, which is fascinating, and I'm going to totally nerd out here because I listen to way too many podcasts, but talk about this negativity bias where even a small loss feels far, far worse than a big gain or a little gain feels good.
It's
so
true.
Like, and it's so funny. And I think that it applies to more than just trading. Like, like if something shitty happens to you, even if it's just a little bit shitty, it's going to stick with you so much longer than something that's just moderately good,
I think, and I don't know. For myself anyway, I just, like with the one the other day where I gave back all those profits, it sucked and I was irritated, but I don't, like when I was a new trader, it would just be like emotionally devastating. And I just don't feel those highs and lows anymore. Even when I'm way up, I'm like moderately happy, but I just know, I've just become kind of hardened and numb emotionally to those ups and downs, which really helps because it helps me be able to move forward. And I know that there's always more opportunities coming. And if I focus too much on what just happened, then I'm going to miss what's coming. So I don't know, again, people ask, oh, how do you get there? And I'm like, just time in the seat, where you just, and having a plan, and I think just experience where you just don't, or at least I don't experience those highs and lows anymore that I used to, which is good. It has helped my trading.
That's definitely a recurring
reset and then get right back at it. And I think I get less mad at the loss, more mad at, knowing where I should have cut it or knowing what I should have done. That process itself, breaking the process, not doing what I should have done is usually what aggravates me more than, the loss itself. But I'm pretty good at just moving on and as long as you're giving back, a day or two's profit at max, it's pretty, it's pretty easy to get right back in this current market environment.
Yeah, the big drawdowns that everybody's going to have as traders, especially when you're newer, I mean, everybody's going to have them, are much harder to come back. I mean, it's just the emotional. I mean, the money is not even the half of it. It's just the emotional devastation that happens on those big drawdowns because it just destroys your confidence. And even if you go back to trading your plans, you don't believe, because your confidence is just destroyed. And that takes time to get back to be able to trade well.
The next couple of days, you try to get it back, and then you're going lower and lower and lower, and you're like, "Where's bottom? Can I even do this?" And right. I was talking to my buddy that was doing it, and I was like, I've done it for many years, like where you have this one, Kodak, and it's like, can I even do this? Like, what am I doing? What if I do this again? And then all of a sudden, you're back. But the problem is like you try to get that back right away. So I always tell people, just think, long term and make sure you have realistic goals. Because if you try to get it back tomorrow, it's not happening. But
because you're going to usually take more risk because you're in a hurry to make it back, and then you're usually digging a deeper hole. If you're in a hole and you want to get out, stop digging. Yeah,
2-3x size means 2-3x loss as well, and you're not prepared for it. But
I feel like if there's one defining characteristic of all of the best traders that I know, it is just that ability, like that ability to remove emotion,
resilience.
And I kind of learned from the best. I mean, like when you think of Greg, like he has a reputation for just having like a stomach of steel, and the truth is that I think that there is emotion there. It's just how you can really manage it and mask it. And he said it, kind of funny in our podcast. He called it acting, but no, honestly, like I feel like for him it was never about the money. It was about making the right decisions, know. And he even said back in the fall there were all these like terrific setups that if he would have taken them, he would have lost money on. And of course, my response was, well, if it's, if you would have lost money, is it really a good setup anymore? But yeah, I mean, in general, like it's just a matter of being able to kind of like compartmentalize that.
It's tough because then you got to go to normal life, and it's like we're going on vacation, and you're like, all right, cool, it's just normal, and then you get excited once you're there, but like leading up to it, there's no high and lows anymore if you're a trader. So it's like there's a difficult part of that. Because many times even Laura's like, we're going on vacation tomorrow. Are you excited? I'm like, I will be.
Yeah, I will be. Yeah, exactly. I will be. Not yet.
Yeah. I remember Tom was doing some type of blackjack tournament or something like many, many years ago. And he ended up winning the whole thing. And his wife's like, Tom, you just won. And he goes, yeah, I know. It was just like zero emotion.
Yeah.
But that's what, makes you great. That's what makes you be able to make sound decisions at that current time, because you're not dealing with all these ups and downs.
Yeah.
Nate used to run laps around your house. I don't see you doing that anymore.
Yeah, I did do that once, I think. That was just for show.
Oh, okay. All right. Well, Michele, thank you for being a part of Traders for a Cause. You've been a supporter for years. We can't thank you enough. Michele used to be a board member at the charity and has really been an integral part in the way that we've grown this organization and gotten to where we are. So I thank you for that. I thank you for doing the podcast. And this is kind of a learning experience for me. And I'm really hopeful that we're going to continue to grow. And we turned over just such an incredible evolution that we made last year in 2020, going virtual, and now these virtual events. We broke all of our fundraising records last year. And at the same time, I get like 2 messages a day, like, when are we going back to Vegas? When are we going back to Vegas? People are just chomping to get back together. So we'll see when that might happen, but I certainly hope.
It's such a great event, and you guys have done such a phenomenal job with it. It's been really fun to watch it grow, and I'm happy to be contribute and happy to have been a part of it in the past, and appreciate you having me on.
Amazing. Thank you so much.
Learn from Michele. You just have to be 1% better every single day.
Yeah. 1% adds up pretty quick.
Well, I want to thank you again, Michele. Thank you, Nate. And we'll see you guys next week. In the meantime, trade, profit, and make a difference. Take care.
Thanks, Zach.
Thanks, Zach.
offshore. I'm already screwing this up. Offshore hunters. I want to say trade on the
You got to
fly.
keep that. You can't cut that out. You can't edit it.
Did he just like disappear?
Yeah.